All right, let's jump right into Nike's first quarter results for fiscal year 2026. Today, we're going to break down the key numbers, the big strategic shifts, and what the road ahead really looks like for the company.
So right off the bat, these first quarter numbers paint a really complex picture. You can immediately tell this is a company that's right in the middle of a huge transition. On the surface, things look okay, stable. Revenues are holding steady at about $11.7 billion, which is just a tiny 1% bump from this time last year.
But, and this is a big but, that top-line number is pretty misleading, because when you look at profitability, the story completely changes. Net income has just fallen off a cliff, dropping by a staggering 31%. So what is going on here? What's driving this huge disconnect?
Well, the answer really lies in how Nike's two main sales channels are performing. And honestly, this reveals the core challenge in their entire business model right now.
I mean, look at this. It's a perfect split. Sales to their wholesale partners, the big retail stores, are actually growing by a healthy 5%. But at the same time, Nike's own direct-to-consumer business is shrinking by that exact same amount. This is a huge puzzle for them, because for years, Nike's whole strategy was about cutting out the middlemen and selling directly to you. Now, all of a sudden, their wholesale partners are becoming more important again, while Nike is struggling to get people to its own website and stores. Okay, so let's zoom out a bit and look at the global picture, because this whole wholesale versus direct trend isn't playing out the same way everywhere.
And by the way, when we say currency neutral, we're just stripping out the wacky effects of exchange rates to see how the business is really doing. And what you see are some big contrasts. North America is a pretty solid bright spot, with 4% growth. But then you look over at Greater China and, whoa, that is a whole different story, with a 10% drop.
So management is basically saying that even with big marketing events with their top athletes, people just aren't showing up to their stores in China. And that is a real problem that's going to take a lot of time and, you guessed it, a lot of money to fix.
Okay, so things are tricky. The challenges are clear. What's Nike's game plan to fight back? Well, they're calling it the sport offense. And the CEO, Elliott Hill, he's not calling it a crisis. Instead, he's framing this as day one of a huge turnaround, and it's all being driven by this new strategy.
So what does that actually mean? Well, in simple terms, it's about breaking down these huge, clunky departments. Instead of broad categories, they're creating smaller, super-focused teams around specific sports, like running, basketball, you name it. The idea is to move faster, innovate quicker, and get their messaging crystal clear.
And look, we're already seeing some proof that this might be working. Their running division, which was the first to try out this new structure, grew by over 20% this quarter. That's a huge sign that this new game plan could actually have some serious legs.
So, to really wrap our heads around all this, let's do a classic SWOT analysis. It'll give us that 360-degree view of where Nike stands right now.
All right, starting with the good stuff, their strengths. I mean, the Nike brand is an absolute powerhouse, and their innovation machine never stops. Plus, that growing wholesale channel is a big win right now, and they're getting much better at managing their inventory.
But on the flip side, the weaknesses are pretty serious. Those shrinking gross margins are really hitting the bottom line. And, as we've already seen, their own direct-to-consumer channel is in trouble. On top of that, you've got the ongoing problems in China and a real vulnerability to trade tariffs.
Now, where can they go from here? The opportunities are pretty clear. There's huge potential in specific performance categories and in new emerging markets. And if they can lean more into sustainability and really leverage all that customer data they have, that could be a massive win for them.
But it's not all smooth sailing, of course. There are some major threats looming. Competition is getting fiercer every day, not just from the usual suspects, but from newer players too. Costs for everything are going up, and if the global economy slows down, people might just stop buying expensive sneakers.
So, looking ahead, what's the company saying? Well, they're being pretty cautious, and there's one really big external headwind that's got them worried.
And that big headwind? Tariffs. Just so we're all on the same page, tariffs are basically new taxes on goods that Nike imports, and they directly drive up the cost of doing business. And the scale of this is just massive. The estimated hit to their bottom line from these new tariffs has jumped from $1 billion to a whopping $1.5 billion. And that jump happened in just the last 90 days.
So what this all means is that even though Nike is working hard on its own internal strategy, these powerful forces outside their control are forcing them to set a very cautious financial outlook for the year ahead.
And that really leaves us with the big question for anyone watching Nike right now. As the company tries to pull off this tricky turnaround, will their new sport offense strategy be strong enough to overcome these huge economic challenges that are heading their way?
So that's the story on Nike's first quarter. For more deep dives into the world's biggest companies, make sure you subscribe. Thanks for watching.